just tell us the word. All right, let's call this meeting to order. Let the minutes show that everyone is here. We would need an approval of the agenda, and please, what we're going to do is we're going to move item number 8 up so that we can get it, our accountant out of our hair. How's that? So if we could get a approval of the agenda, please.
I'll make a motion to approve the agenda with that change.
Okay, a second by Doak.
A second.
All those in favor signify by saying aye.
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 Okay, you all got a copy of the minutes. Are there any questions or changes? If not, I would ask for a motion to approve, please.
So
Virginia
moved.
and Doak second.
I second.
All right. All those in favor signify by saying aye.
Aye.
All right. I don't see anyone here from the public. You're on.
If we don't mind, I take that off.
No,
All right,
please go ahead.
I'm Brian Grunewald with Clifton Arson Island. Certainly want to say thank you for having me here today. Certainly, if there's any questions throughout the discussion, please feel free to ask. And before I do get started, I do want to thank Paul and your team. Certainly going through and doing an audit in a COVID environment has created some challenges from our perspective, doing a lot electronically. So certainly I want to thank Paul and your team for the cooperation and assistance. In terms of the documents, I believe you each got the financial statements, the large bound document. Included in that is what I'm going to refer to as a management letter. That's a staple document stuck in the back. That includes information that we're required to communicate as part of the audit process. Pretty standard information. In terms of the discussion, I guess I'm just going to walk through the PowerPoint that's up on the screen. If anyone has any questions throughout that, please feel free to ask. Okay, that being said, Paul, can we go to the first slide? Okay, this first slide, I just wanted to give you a summary of the audit results. The financial statements actually include multiple different reports. The first bullet point is focusing on the independent auditor's report. Essentially, that's considered to be an unmodified opinion. And that really is just to convey the fact that I believe that your financial statements are complete, accurate, and in accordance with our professional standards, meaning they include all required financial statements, all supplementary information, and all required footnote disclosures. So that's certainly what you should hope or expect to see. The second bullet point there is focusing on financial reporting and internal control. From an internal control perspective in an audit process, we're required to gain an understanding of your internal control environment. Essentially, we'll look at how you process your bills, how you handle cash, etc. We do not give an opinion on that, but we do use that information for our audit planning process, risk assessment, etc. So from an internal control perspective, there's no issues, no findings, no reportable conditions. So you're doing things the right way. And then the last item there is focusing on compliance with, as part of the audit process, we do look at federal and state aid. We go through a risk assessment and rotational process to determine which programs that we actually test. And as a part of that process, we do have 2 items here that are listed as the findings in blue that we've communicated as part of the audit process. I will state that both of those comments are things that have been communicated for the past several years. I can give you just a real brief overview, and if you want me to go more in depth, let me know. But the first item there really deals with the schedules of federal and state awards. We go through and where this gets a little bit more complicated, and everybody in the state, every county in the state is dealing with this, is when the state distributes money, there's an allocation process that they go through, meaning some of the money might be from one grant, some of the money might be from another grant. So we go through and help with that allocation process because we've got templates and things that we've built that help make that process a little bit more efficient. So again, you've seen that for the past several years. And then the item finding 2019-2, uniform grant guidance implementation. The background on that is back in December of 2014, There was some changes with regards to federal grant compliance. There's a big emphasis on policies, procedures, documentation. So this finding really relates to that. We've had, again, these have been in here for the last several years. Paul's well aware of, the discussions we've had, just working with policies and procedures, and we've got some draft documents on that. So it's just a matter of formally getting that stuff approved and finalized. But does anyone have any questions on that?
The way you describe them, they don't sound like they're deficiencies. Are they deficiencies?
They're technically things that I would say are reportable conditions. Now, are they things that we see throughout our client base? And we work with approximately 40 counties in the state. Both of them pop up frequently. So there are things that we're required to communicate. Are there places that do handle that and do those on their own? Yes. Ideally, I think that's where you want to get to. I would say Paul is well aware of them and has made progress on both those items.
What, are we doing something wrong?
I mean, there's things that we're reporting, and there's things that could be done differently. And again, I'd say from like the uniform grant perspective, it's a matter of getting those things formally in place. Is there wrong from the perspective of when we test grants? Is there, expenditures and things that we don't have support for? No, there's no issues with that. It's more of the policies, procedures.
Could you give us an example of what you're describing here?
So, like the uniform guidance walks through, it's pretty in-depth. And again, it talks about policies and procedures. So for example, what's your procurement policy? And by that, there should be certain thresholds for when you have purchasing type transactions, do you meet certain criteria and are they documented, right? So what the county is doing is certainly, again, nothing wrong. It's not that expenditures and things aren't supported. It's just that the formal policy, which would provide guidance to your departments and other people throughout the organization with regards to what you should be following, that stuff isn't formally documented as well as it could be in accordance with these standards. But I think it's maybe communication throughout the departments. Again, having that formal document, making sure that everybody's following that.
So let's put that into layman's terms then. So let's say, for example, the highway department got a grant for a new grader, and that department head is going to have to do the proper paperwork to apply for that grant and then fulfill that grant obligation with the criteria of how we unloaded and maybe another grader, the amount of money, that whole reporting that department head would have to do, which then goes up the chain to Paul. That's not quite in compliance?
So I'll say this, the stuff, the documentation on the individual grant, again, there's no issue with the purchase of the grader.
Okay.
Right? It's more the overall documentation of the policies. Paul, I don't know if you have anything else to add to that.
Go ahead.
This has been a work in process from day one when I came here. So if we have policies, many of them weren't written. If they were written, they don't meet those standards. So, yeah.
Why can't that be fixed in 1 year? Why is this a recurring theme?
I'll show you the list sometime of all the
Is
standards,
it just a matter of
volume.
volume and the people you have to work on it? Is
Yes. And I'll even address number one here. That's a cost benefit. If we do that in-house, it takes more time. Our others have
Right.
the expertise on staff. That's a cost benefit. I don't know that that's short term. That's going to be there for a while.
Well, right, why is it a deficiency though if these guys are doing it? You said you had templates and such that you use.
Yeah.
Why is that considered a deficiency if we've made that decision to go that route?
So I'll say ideally, in accordance with our professional standards, the organization would take responsibility for that and do that, and we would come in and audit it. So we're truly on the outside looking in.
I see.
Okay, so we are hired to do a service. There's nothing wrong with doing that service. We just have to communicate the fact that we are doing it on your behalf.
Okay,
So, and it is
That makes sense.
it is an efficiency.
all right.
It
And then
does
the
not
other
sound
one,
like a high-value deficiency by any means.
Okay,
A
so
technicality.
So I work with 7 counties. I would, and again, I'm just kind of shooting from the hip here. I know on at least 3 of them, we'll have this similar type finding. So.
and
my
they've hired you
point
to,
with that is-
they've hired you to do the same thing.
Exactly. So there's some that, we help out, and there's some, and typically a little bit larger counties where they might do that on their own. And it depends on staffing and other capabilities within in the county.
If I may. So if I do with each of them, the first one, absolutely, as Paul said, it's kind of cost benefit. If you have larger counties that have the staff, they are more likely to be able to complete that, and then Clifton can come in and do just their regular audit function, because I'm going to say it this way, while the finance department isn't a department of one, from a cost benefit standpoint, you would actually have to hire additional staff to meet to that standard, and therefore the cost isn't, it doesn't, to me, it isn't worth the cost. Instead, we're doing things right. Clifton would tell us if we're doing something wrong, and if we were doing something wrong, they'd have to look at themselves because they're the ones doing it. The second part, which comes to uniform grant guidance, and I hate to say it this way, but again, this definitely is a work in progress. We have to remember 5 years ago, we didn't have a CPA in our county at all. And while it may seem that we can do this, it is a gargantuan task to have all these different departments and do all the different policies and the like. So we continue to try to tick them off a little bit at a time. But, and I don't want to speak for Brian, but in the case of audit findings, I would consider these to be minor as opposed to major. Is that a fair assessment, Brian?
I would agree with that, and again, I think the fact that we have multiple other counties that see these similar type findings, I think is, a testament of that, right? And again, I just, the volume of information that you have to go through with uniform guidance, I mean, that standard is several hundred pages long, and it does require a lot of the documentation and things, so.
One comment on what Scott said. Yes, CLA puts the report together. I am still responsible. I absolutely review it. I don't say if there's a mistake, it's on them. I agree, and it is ours. It's the time and expertise it takes to put it together is what they're doing. So,
For Paul, so this is a work in progress you've been working on for 5 years. Are you thinking you're gonna wrap it up in a year, or is it still another 5 years?
not in a year, not in 5, so somewhere between.
Okay,
Assuming we don't get a bunch of more requirements.
understood.
I will tell you that the CARES Act funding is gonna add some more, compliance
that-
requirements there as well.
Okay, so one follow-up question on that. In those 5 years, have you had more, a fairly good percentage of the work added to because of new requirements? So is it a moving target for when you're gonna get done?
I think I've made more progress when they've added new ones. But again, I want this done yesterday, and that's not happening either.
Maybe just to touch on Scott's comment too, I mean, this is a high volume area. I do know that Paul's been pulled into a lot of different things, so I think some of it's been, what's the priority? And I didn't go through and look at this before I came here today, but if you do go back to 2018, 2017, there were other audit findings that were communicated that have been addressed. So you've been making progress in areas. It's a matter of what those priorities are.
Fair enough.
Okay, sounds good. Okay, then I do have a few other slides that are gonna get more involved in some of the different financial aspects. This slide, I just wanted to give you a real brief financial overview. And this is really a bullet point list of some of the more common benchmarks or things that like I tend to look at or a rating agency would look at when they go through your financial statements. So the first one is focusing on your fund balance reserves. Certainly that's the most common benchmark or metric from a fund balance perspective, and you'll see this, I do have a couple other graphs here. From a fund balance perspective, your general fund is in very strong condition. That's the point I want to make with this point, and again, you'll see some more information on that. The second bullet point is focusing on net position, and I did reference the page number there. In terms of accounting, this is really looking at a benchmark that includes all of the assets, all of the liabilities on a full accrual basis of accounting for the county. You can see that your net position, your equity is increasing. Having that equity go up is certainly a good thing, and that's all of your activities combined. The third bullet point is focusing on long-term debt, and I do have another slide on this as well. At the end of the year, you do have 10.9 million of long-term debt outstanding. There's a statutory debt limit, and I'm not saying you would ever get close to that, but from my perspective, Your debt's been very manageable. Certainly, you go through the budget process every year and consider your principal and interest payments and et cetera. But from a debt perspective, no issues, no concerns. And then the last item there, just wanted to touch base with regards to the highway department. From a net position or equity perspective, your net position did increase, meaning your equity is going up 357,000. Certainly that's a positive. And then one of the other things that I like to look at, and again, I've got another graph on this, is what I'm going to refer to as working capital that looks at your current assets and current liabilities. I always look at that from the perspective of, well, what's your ability to pay your bills as they become due? Do you have the cash and the access to cash to do that? Your working capital is 2.6 million. Again, I've got a slide on that, but if I go through and benchmark your trend as well as comparing that to other counties, you're in a pretty strong position. So, just an overview, and then this just starts to get into some of the details. So this is focusing just on your general fund, and I always like to look at trends. So the first thing I always like to do is look at, okay, what's our total and how have we been trending on that? I mean, you can see I'll say the slight upward trend when you look at your total fund balance over this period of time. Back in 2016, you can see you were just over 6 million. At the end of 2018, you were just over 7 million. And from 18 to 19, your fund balance did increase 679,000. Certainly you can get into the details of the budget to actual on that. The couple things that I tend to focus on the revenue side, sales tax and your positive trend with that. For 2019, your interest and investment earnings is certainly pretty strong, above budget. You roll that forward, and I feel like I'm always looking backwards. It's September, we're looking at 2019. Obviously, COVID has added a lot of challenges to 20. But when you look through your trend through 19, certainly very positive with regards to overall fund balance. When I look at the different categories here, there's a couple that I want to touch on. The non-spendable, and this is where we get into accounting definitions. The non-spendable, you have advances from your general fund to help cover deficits in other funds. We'll talk about human services here in a second. That's really one of the main components of your non-spendable category. So you can see how that's fluctuated, but you were at 2.3 million at the end of 2019. The assigned and committed category, I always view that as where you want to go through, and that's your planning opportunities. If you've identified purposes that you want to set aside money for, that's the category that it would show up in. So you can see at the end of 2019, you've identified or have essentially 985,000 between those assigned and committed categories. There is additional detail in your financial statements on page 51 if you want to look at the detail of that. It includes things like contingency, dollars that have been set aside for parks, vehicles, fairgrounds, other. Again, that's kind of that planning opportunities category. And then the last category, which is the one that tends to draw some attention, is the unassigned. That's the amounts that's available for working capital or additional contingency reserves. And again, there I would point out, certainly some fluctuation, but the overall trend of where you're going with that. You were at 4.1 million back in 16. You've been able to increase that up to 4.4 million at the end of 2019. So the two things that I would focus on are your overall trend and then that unassigned. Any questions with that? Let's move ahead. So this next graph is, again, just focusing on your general fund. And now the two lines here, I'm focusing on the relationship between the amount of fund balance that you have and the amount of expenditures flowing through your budget. That's a common way to benchmark how much fund balance do we have or should we have. From a total perspective, you can see the green line. And again, you see some fluctuation. You're basically between 70 and 80%. On the blue line, again, you see a little bit of fluctuation, primarily between 45 and 41%. My point when you look at these lines is, particularly with the blue line, you're pretty consistent over a 4-year period. And when I think of how you calibrate that line, how strong are we? From a fund balance perspective, your fund balance percentages are very strong, meaning you have strong reserves, which obviously is a great thing financially. Any questions with that?
When you show us a graph, you don't show us a benchmark that you would say would be the minimum or the average. What would those be for for generally?
So
When you assess it as
I just want to put a disclaimer out there. Now, from a fund balance perspective, it's clearly a local decision, a board decision on how we want to run our budget. There are some counties that I work with that have taken the position of, we want to keep that fund balance a little bit lower, understanding that if I need cash, we're going to go to the bank and get it. So there's some of that out there. I'd say the general benchmark is if you start looking at the 25, 30% for your unassigned, you know, that's considered to be a strong number. So you're
Well above
above
that.
that, you're
Okay.
at a strong balance.
And for the total? Or that does, is there?
The benchmark is typically more based
Oh,
on
no.
the unassigned.
Okay.
And I will say this, that's a general comment, and this is only looking at your general fund. When I think of counties and the nature of your activities and the multiple funds that you have, particularly like general fund, human services, if you were really going to evaluate that and come up with a formal evaluation, I think it's important too to also consider all of your tax levy supported funds, where this is just focusing on your general fund. But
I was gonna bring that up too, that this is looking at the general fund, which is at 40%. It looks high, but we also have a human service fund that has $1 million+ deficit that is not in here. So that's the bigger picture we just mentioned.
Right. Okay, and then if we go to the next slide, Paul. Okay, I know there's a lot of information here. This might be a little bit hard to read. What I wanted to do is just give you a snapshot of the fund balance levels of some of your other governmental funds. So you see the big long list here. And you can see the comparison, 18 being the column to the left, 19 being the column to the right. A couple of highlights and things that I want to focus on. The first line there is focusing on your county road and bridge fund. That was at 3.5 million, now it's at 2.4. Again, you control what you want to spend those dollars on. To Paul's point, the third line down is focusing on human services. At the end of 2018, your deficit was 1,308,000. You did reduce that deficit slightly, and you're at 1,215,000 at the end of 2019. Now, that is one of the reasons why when you talk about your fund balance, you certainly need to be conscious of that when you think of the overall impact on your general fund. So certainly want to point that out. And then the other things that stick out, really the last two lines of this graph, the revolving loan program and then economic development. Your economic development did go from 500.
On that human services, just to be clear, what is the length of time when those deficits took place?
So that's been a recurring deficit. You know, certainly I'd have to chart that out to look back, but it's been in a deficit.
But this is, sure, I get that. My question though is, this is incurred within 12 months, that total amount? Or is
So
this being carried over?
the ending balance is the cumulative total over all of time.
Okay, and you don't know offhand how far back that goes, how long it took us to get to that $1.2 million figure?
Exactly. So I do want to highlight that in 19.
Does anyone know? Paul, do you know by chance?
It was negative, and 5 years ago when I started, certainly not that big, but there was the old Wimker process. There was a big correction in the first year or two. So between 5 and 10 years to get that. It's gone up and down little bits. We've had, last year we had just under 100,000, I think, surplus. So it came down a little bit. Oh, it's up there, 1.3 to 1.2. The year before that, I think there was a loss of some amount, I don't remember. But the biggest part of that came in about 15 or 16, which was for about a 3-year period of where those transactions weren't recorded correctly. There's a bigger liability out there than what was originally recorded.
Once you get that deficit, you carry that until you somehow get that from that department reduced down, balanced out, right?
Yeah, I think there's really two options. And I think the first one is ideally, you would like that department to work that balance off as you've made progress in 19, right?
Right.
That's, with the size of your deficit, clearly that's going to take some time, right? If you go down both.
Well, at that
know.
rate, it would seem that to me that would take about 12 years, right?
Right. And again, because of that fluctuation.
Not being a math major like you, but
12 good years.
Right.
thinking quickly on my feet. Go ahead.
Right. You know, and certainly, you know, there are places that would say, well, we have a deficit. Do we want to transfer in from the general fund, take
No.
balances from the general fund and cover that? You could do that. I'm not saying you should do that.
We
right?
won't,
I'm
but
just saying
go
that's,
ahead.
those are really your two options. So, yeah, I would do exactly what you're doing. I know Paul's been focusing on that. I would continue to work with them on the budget and try to have a plan for how we whittle that down. And again, that's gonna be a slow process over time.
And of course, this is assuming, your plan is assuming that we're not actually putting extra money in in the budget each year to try to help get that down, that we would just be, staying at what the regular expenditures would be and then trying to work that down.
Exactly.
So in other words, we're gonna have this with us for a long time.
Yeah, I mean, potentially.
I mean, it sounds like this debt essentially occurred because more of an auditing correction and how things were tracked? Or in the last 5 years, how did we spend
No,
that kind of money in that department?
we're paying for the sins of the past, right, Paul?
Yes. There's a program where if the WIMCR process, so if your Medicare, Medicaid payments don't cover it, they'll give you a payment later. So in this year, you get some money made up for this year. Don't spend it again.
So if we're at 1.2 million, we made up 100,000, that's pretty good. So I don't know if that means that, something was cut, something wasn't offered. Is that trend gonna be possible when the needs of that department are only gonna get more increasing, I would assume?
I can touch base on that. Supervisor Vollenweider, the concern is real, which is, again, part of the reason why I've taken a more active role. Not sure how long it will take, but as both Chair Olson and Paul had said, and to a certain degree, that 1.2 million is sins of the past, as well as there wasn't as much focus on the financial administration and management. That is now starting to change. Yes, we will start to address that. And so the hope is, and again, knock on wood, I hope it doesn't take 10 years, but what we will continue to do is instill within the department the need for good financial management, so that way we're continuing to address this. And the other part that we aren't really talking about, and Paul had talked about with the WIMCR payment, is before, in past budgets, the WIMCR payment, which is supposed to cover previous losses, that would get budgeted as more money to spend for the next year. If we get any WIMCR payment, that will go, if we have any, that should be instead be applied to the deficit that we have, because that was the purpose for the WIMCR payment.
Pay back the general fund,
To pay back the Human Services Fund that's in deficit.
but it's in deficit to the general fund,
Uh,
right?
I'll let the accounting part of it, where,
Isn't that essentially where the money came from?
When you are in a deficit position, I think aspect one is trying to work out of that deficit, right? Now, when you have that deficit because you are a county, if that fund needs cash, you've essentially borrowed from the general fund. That's all being tracked. As you come out of that deficit, it will be essentially, repaid from us.
To the general fund. Right.
yeah, I'm not disagreeing with what you're saying. It's just from an accounting standpoint, I didn't want to misspeak in that the Human Services Fund is in deficit, so any money that is extra would go to reduce that deficit. And then, but have we paid the human services costs and kind of borrowed that from the general fund? Yes, no different than what we did with the solid waste fund or the like. So yes, essentially, in the reality part, you're right, Professor Vollenweider, Supervisor Vollenweider. Wow, there we go. But in that same respect, from an accounting standpoint, I didn't want to speak otherwise because I have two CPAs here that would say, well, technically, and so I wasn't going to go there. So
That's fine,
And
no, I understand.
there's a difference between fund balance and cash balance. We don't report negative cash in the statements. That's the borrowing between funds. The negative fund balance is in the Human Services Fund that stays there until it's gone. So for year-end reporting, the interfund payables are to make sure that cash balance is not negative. Those two are related. They're very close in this case, but they're slightly different things. So we track the fund balance, and the cash kind of comes along with it, because if you have negative fund balance, obviously you spent more, you have less cash. So they're one and the same, but they are tracked slightly different.
So at what point would we consider debt forgiveness to the general fund?
I will say I probably said it in this meeting before, but once they right the ship, then we take a look at that. But if they're going to continue to have deficits, throwing money and making doesn't fix anything. So fix the problem, and then we'll look at the bigger pot of money, the bigger
And
deficit.
righting the ship doesn't mean 1 year.
You're right.
It means that we need to see a consistency over a few years that says, yes, they now have their financial house in order. Now we may be willing to, quote unquote, if the finance committee is willing to forgive that, similar to what we did with solid waste.
I think I've been at this for 8 years and it's been in deficit annually. And a lot of that is to do with the services that are required, that are reimbursable, some are not reimbursable. We provide some services that are not required. So if you look at the whole picture, I don't think you're ever going to operate at out of a deficit area in human services. I don't think it's going to happen.
We can, though, we can look at, the part of it was filing proper paperwork, getting reimbursements, and then also going beyond services that are required, which, I mean, I know it's great to provide every service you possibly can, but at what point do we determine that that's not sustainable by the county? And I think the real lesson in all of this, kind of the reason I bring it up, is the elected supervisors simply must monitor things of this nature and make sure that if there are problems coming, that we do something, that you look at, do we need to look at the budget for this each year, or are we needing to look at the expenditures, but to have it get to a point of, $1.2 million deficit, or previous year $1.3 million deficit without something being done to, intervene. I'm not sure that that's the best approach.
I just see we have the chairman of the committee here. I don't know if it was last year, about 2 years ago, when we brought on the financial person in human services. There was supposed to be, at least the finance committee had encouraged that the committee get a monthly report from the finance person to make sure that nothing jumps out at people, that they're aware of things as they're progressing, and not at the end of the year, oh, what happened here?
Right.
Is that happening?
That is happening. We do get financial reports at every meeting.
Yeah, I remember that conversation.
To answer your question, Supervisor Ramden, yes, as the acting human services director, and Supervisor Haskey Baker can corroborate if need be, yes, we do put out monthly financial reports. Plus, I have taken a much closer look at, I'll call it the revenue side, than even more than the expenditure side. And a lot of that comes down to billable hours. I have had a conversation with the unit managers about the importance of making sure that those notes get in and that those billable hours can then be invoiced. And the hope is that with that change, we're going to see an increase for this year as well as for when we go into the budget. I think we will see an increase in billable revenues for 2021. So that should be helpful as well to address Chair Olson's issue that the county provides a certain amount of tax levy to the Human Services Department. In that same respect, they generate a certain amount of their own revenue. If we're doing our budgeting right and everything is perfect, then the amount of tax levy that we give them combined with the amount of revenue they generate should equal exactly to the penny what we spend in revenues. Now we know nothing ever comes to the pennies, but if we have a very small fluctuation either way, then we know we're doing budgeting as we should. And again, that's the ultimate goal, is to get to that point.
Okay, let's move on.
And I just wanted to give you a real brief overview of the highway department. And here, I guess I chose to focus on the working capital. And again, that's looking at current assets, things like cash, accounts receivable, and things that can easily be turned into cash versus current liabilities, accounts payable, bills that are due, accrued liabilities for wages and things that are due and payable to your employees. When you look at this graph, again, two things. You've got a positive trend, And then again, if you kind of calibrate that line to have 2.6 million in working capital for a highway department, of your size, I think is certainly strong. You know, we certainly do get into more detail when we visit the highway department and meet with the highway department. But you know, they've come a long way with regards to their financial condition as well. And again, I just wanted to give you a perspective, kind of the trend and where they're at from a capital perspective. Any questions or thoughts on that? Yep. Then I also wanted to touch base, you know, we focus a lot on fund balance reserves. When you also think of financial condition, it is important to think about how much general obligation long-term debt that you have out there. This gives you just a real brief snapshot of what your balances have been. You know, 13.3 million back in 2016, 12 million at the end of 18, 10.9 at the end of 19. And I do want to put a disclaimer on this too. You know, certainly when I go through and work with different counties and look at what their debt balances are, I mean, it still does come down to the fact that you have to balance your needs and wants and priorities when you are servicing the public. So if you've had someone who's, you know, built a new jail or, you know, put up a new highway building, I mean, there's certain things that do affect this. So I'm not trying to say that your goal is to get as low as possible. It's the point is to make sure that you manage it as part of the budget process and balance those needs and wants. Certainly a positive trend here. From a statutory perspective, I mean, you're well below the statutory limit.
Bird. Or squirrel, was it?
Is that what it was?
Yeah, it's coming at you.
So I just want to point that that's out there. And again, you know, when you look at that formula, I would never recommend that a county get close to that, but just wanted to point out that it is.
So could you explain where we're at within like the percentage of our borrowing capacity currently? And what healthy would be considered, I'm hearing we're healthy that way.
Yeah.
But how much, I guess, room do we have to move the needle? You know, we have things that you mentioned between a jail and a highway building that we're considering.
Yep.
And what would the impact of that financially mean to the county?
Yep. So from a benchmarking perspective, like financial rating agencies, they'll kind of focus on a benchmark of 20%. And what they're looking at is when they look at your budget, how much of your budget is used to repay. I didn't calculate that. I can certainly follow up with Paul, and maybe I'll do that. I'll follow with Paul and send you a couple.
It's something we need to know for sure.
Yeah. And then I can certainly try to calculate the percentage here. Your statutory debt limit is 89 million. Your actual is 10.9. So you really have 78 million of debt capacity available within regards to that overall limit. Now that would take you 100% up to the limit of what you're allowed to do.
So is that based on our tax rate today or something? I mean, what is that statutory limit built around
Driven based off equalized value.
in the county?
Yes.
Okay.
But what is the amount of debt that we carry in comparison to a similar sized county, other counties? Are we higher?
You know, and again, everybody's got their own perspective on that. You'd have to think about where are they at with regards to did they get that detail. I think what I'll do is I'll follow, because I don't want to shoot from the hip right now. I can follow up with an email with more information on that. My perspective is, and the point with this slide was trying to give you a perspective
Right.
of, I don't think you're higher out of line. You're obviously controlling it. You're obviously
Right.
bringing it down.
Well,
Now you're getting to the point where you're trying to balance needs and wants.
Right. Well, I mean, these conversations always strike me as being, you know, similar to the letters that the credit card companies send to me. You know, you could be taking on, you know, far more debt. Well, I mean, well, you could take on this card and we'll send you $25,000. Well, okay. I mean, I could.
At the end of 2019, our outstanding general obligation debt is 12.23% of what our legal margin is for new debt.
Thank you for calculating. I was going to pull up my phone and calculate. Most of the counties that I work with, I do know are between like 15 and 7%. And again, everybody's got to consider what factors and what's going on there. When I think of the lower end of that, it's a county that's maybe a little bit farther south in a higher equalized value territory. You know, so everybody's kind of got their own challenges to deal with.
Not everyone can be Walworth County.
Brian, is the limit still 5% of equalized?
That's the
Maximum.
formula, exactly, yep.
So if we were to decide to build something, a major capital project where we had to borrow $20 million, would then you come back and say your county's in a bad position now suddenly, or?
I would come back and say, you need to remember that you made the decision to do a jail, do a highway department, whatever your capital project's gonna be. You know, you're the ones who have to balance the needs and the wants and the priorities along with, alls I would say to that is make sure that you've got, what do you wanna say, budget responsibility for that, understand the budget impact.
Mhm.
And as long as the board, is comfortable with that decision and thinks that's best for the county, that's what matters. You know, obviously, being that I'm a CPA and financially typically conservative, I mean, I think making sure that you control that is positive, but.
That does go back though to the chair's point that just because someone's gonna give you that loan to incur that debt doesn't mean you should. And, you know, when we have the CPAs that are working in our best interest, we need to understand where financially we're at on the needs and wants and should and could do. Not,
Yeah, I understand that. And I would say a couple of things with that. First off, keep in mind that the purpose of this report is to provide you an opinion on your financial statement. I'm not trying to give you an opinion on your financial statement. I'm just trying to articulate where you're at, right? So certainly we could get into that discussion more if you'd want to. The other aspect of that, and why I do think you've maybe seen an uptick with different counties and particularly school districts doing things, is, I mean, where interest rates are too. I think some people are trying to take advantage of low interest rates. So it's a balance, and I think you've got to, alls I would say is make sure you're taking a long-term perspective and look on what you think you need. You know, you probably don't want to be in that position where we push everything off, and then all of a sudden we get to this point where 10 years from now, we have to do everything. That's going to put you in a tough spot too. So you got to have some balance and some budget responsibility.
Okay, let's move on.
Then the last piece here, I just want to point out that, you know, we follow the standards and the requirements of the Governmental Accounting Standards Board. They continue to be busy with issuing new standards. They did delay implementation on a few things with result of COVID, so they pushed a few things back. These are just a couple of the standards and things that we'll be working closely with Paul to make sure that they're properly implemented. Just to give you a perspective of how busy they're up to GASB 95. So there's a lot of other things we got to work through. And again, we'll work with Paul and making sure that we share information and try to answer questions. That's really all I had. And I just want to circle back. I mean, if you think of that financial overview slide, I know we've had a lot of discussion on certain things, and debt and human services. If you go back and think of what's on that financial overview slide, I mean, there's a lot of positives that are going on within the county, particularly your general fund reserves. You got to keep that in mind. Obviously, everybody's dealing with budget challenges. 2020 and COVID is going to, you know, add to that pressure. But you've been doing the right things. When I work with counties, it's not uncommon that when you think of all the funds and activities that you have, from highway to human services to solid waste to the general fund, it's not uncommon to have, you know, one or two of those that are not doing as well as the others, right? So to have one that's a challenge isn't uncommon. It's you just got to work through it as part of the budget process and make sure that everybody's aware of it and doing what you think is best for the county.
We don't want to be common.
Sounds good. Any other questions or thoughts?
Thank you very much.
Okay, that
That's
it?
for me. I'm finished if you guys are.
Good. No questions for him? Thank you.
thank you.
Okay, sounds good.
Okay. Mr. Administrator.
We're talking about, well, I'll let the monthly financial reports and then working the medical, dental, and the overtime.
Okay. Monthly report for July. I will keep this shorter than last month because we went in a lot of detail. The routine stuff, there's nothing new that came up. So from that perspective, there's no need to go in detail. What I do have now is a different perspective. Is in the budget process, one of the pieces of information we ask for is where, as a department, do you think you'll end up at the end of the year? So this is the first formalized, calculated, documented, reported, where do you think you're going to end up at the end of the year? And this being an unusual year, typically we're in pretty good shape. There's a few departments this year that may be over. So I'll go through the big departments and the ones that'll be over. Overall, I think it's a conservative estimate. We'll be okay to the tune of 150 to 200,000. But
Paul, did we get a copy of that, or are you reading from?
this is just my notes for speaking. Yeah. You will, when the budget is handed out, you can look. There's a column that says 2020 estimated year to date, and there will be in all the detail you ever want to see.
Okay.
So child support, I think they're going to be fine. The revenue for the first two quarters this year is down a little bit, but it does happen, and it has happened the last few years where quarter 3 and 4 are higher. So they could be down a little bit. I'm still thinking they're going to be okay. The coroner, which we've talked about a couple times at least, the coroner's been busier this year, not COVID related. They're just more coroner calls. Finally, he did put the pen and paper, and I know he put some time and effort into this. So he's estimating he's going to be about 8,300 over. Now he gets some revenue. Some revenue will cover some of his expenses. Certainly not all of it. So when we get to the bottom, so if the question comes up, how is this paid for? Well, this department's going to be over a little bit. There are other places where there's enough to cover it, and that's where the 150, 200,000 comes. Where we're going to have, we're going to be okay to the tune of about that much. The district attorney, again, this is an ultra conservative estimate. I think he's going to be about 750 over. I mean, again, 750 really is nothing, and I'd give that a 50-50 chance he's going to be just fine anyway, even for 750. Highway, roads, and bridges, to date, now it's July and August, to date, their winter maintenance is about 90%. So Todd's estimating that there'll be about 138,000 over because of winter. So that's assuming we have a normal winter. If we have no snow, we could be okay. If we have a bunch of snow, it could be higher than that. But as of August, that's the best estimate. Information Services has purchased some items COVID related for cameras and whatnot. That will be covered by the Routes to Recovery grant eventually. The county treasurer, I missed sheriff. The sheriff we talked about quite a bit last time when Dave was here. But again, yes, jail revenue is down quite a bit. The sheriff's revenue is down quite a bit. There are related expenses, the biggest one being board of the prisoners is down a lot. And there, when we went through this exercise as well as last time, they're projecting they'll be under budget overall. Now between sheriff and jail, there might be some ups and downs. Well, there will be some ups and downs. But overall, their department will be under budget. And then the county treasurer, interest rates plummeted. It's about a $60,000 hit. So we're going to get about $60,000 less in our interest earnings. Our longer terms are okay because those are invested in CDs and longer items. So those rates won't drop off for a while. But anything we had in our short term took an immediate impact from, there was almost at 2%. Now we're down to 0.5 or 1/4%. So that's an immediate impact. Health and dental insurance, we'll look at the reports in a little bit. It would appear that the health insurance will have some left over, but because of the shutdowns, I think some of that's going to carry over into next year. Dental fund will be fine. So overall, we'll be under budget as a county. I covered all those departments. If there's one I missed that you're curious about, I have some numbers here. Most of them are routine. Yes.
Could you go back over the highway one? Did you say that we've spent 90% of what we had budgeted for winter maintenance already?
Yeah, winter maintenance, now winter is seasonal, so the first few months, the last few
Right.
months.
So we only have 10% left to cover November, December is what you're saying?
Yes, now,
We could fall short there.
if it's an average winter, we likely will. So Todd's gonna look at an average winter, he's expecting more.
What was the overage they thought they would have then if it was an average winter?
138.
Oh, okay.
So if there are no other departments, or if there are no other questions, I will bring up that effective September 1st, there was a presidential emergency order, whatever it's called, to defer payroll taxes for employees. And looking at the very vague guidance so far, and lots of opinions out there, but what this will do is allow an employer to not withhold the Social Security taxes from an employee's paycheck, thereby raising their check from September through December. However, it's a deferral, not a forgiveness. So starting January through April, they would have to pay that back. So similar in nature to the property tax deferral. There's some unanswered questions, but there's also an enormous amount of administrative work that would be on our side. I've seen from a question went out with my other finance directors, do you plan on implementing this as a county? And I got about 31 answers back, and they were all no. I haven't heard, I had 2 questions from employees. One, I don't know where they stood. The other one was not in favor of it. But this isn't, I don't see this as a very good thing. We're just kicking the can down the road for the employees. We'll give them more cash now, but it's going to come back unless somebody decides to forgive us, which is not part of the program now. They're going to have to pay back essentially all of it in the next 4 months, and that just doesn't make sense to me.
Well, and there's a reason the employers withhold that money.
Yes.
So that money's there. Now you're gonna go back there and try to retrieve that through, I just see it as a disaster, and that's not something that each individual employee can opt in, or do we do it as a county?
The employer has to decide, and that's been generally agreed upon. Again, it's a little vague. Can individual employees opt in and out? I'm not sure, but as an employer, I would suggest that we don't. So if we want to discuss this and whatever, have it on the next agenda, we can, if you decide that.
As I understand it, it's not required of the employer. The employer can do it, but it's not required.
Correct.
So if I have a vote, I'd say, no, it sounds bad to me.
No.
Well, think of it this way. So you're giving them more money for the next 3 months, and then you're giving them less money the next 3 months. So in the big picture, it's really a wash for the employee. But from the administrative standpoint, the amount of time and that needs to be put into that, it's not worth the time from an administrative standpoint. And honestly, from a employee standpoint, they're not gaining anything financially. It's a deferral, yes, but the amount of money that we're talking about is not going to be significant in the long run.
And I would guess that net would be a loss for the county. If you're putting in more effort to change the payroll now and then more effort later it's not benefiting anybody that I can see.
It's a significant amount of time we take. Our payroll system, I don't know that any system's going to be able to track this.
Yeah.
And it's not as simple as just doubling the FICA rate or Social Security rate next time, because your earnings next year are different than this year. So we have to manually track this. And to me, I don't see the gain of it. All we're doing is kicking the debt down the road for the employee. And if I was a financial advisor for somebody, it's like saying, okay, just put it on the credit card if you can't afford it now. Well, you got to pay that back at some point, and that doesn't make sense. And it's going to be within 8 months. I don't see that it's gaining anything for anybody.
We don't want Bev to leave either, so.
Do we have to take action on this?
No, unless you want to.
I guess, exactly. If the committee is willing to basically direct, it doesn't need to be a motion. If we're hearing from the committee that we do not want to move forward with this, then that is direction from the committee, and that's sufficient. Which is what I'm hearing from the committee.
I certainly
I'm seeing,
do not want to move forward with it.
see and nod their heads. So,
Okay. And I didn't discuss the sales tax. So the last item, so sales tax, the latest collection was 128,000 and change. putting us at 731,800 for the year, which is about 30,000 ahead of last year. So our collections are still coming in. That was predominantly for July sales that we just received now at the end of August. So that continues to be steady. That's all I have.
Okay.
So I'll do the medical loss report, dental loss report, and the claimants, the large claimants. I don't want to belabor this. Instead, it's just a good number to look at. Again, I always look at the far right. So for the medical loss, we see that for the year, we're at an 88.41%, which means that right now we have collected more premiums than what we've had to pay out in claims, which is a good thing. I think this trend will continue through the year. At least that is my hope. Dental, you see it at 81.41. Again, I think that trend will continue to happen. And as for large claimants, year to date, we're only at 6. And when we talk about large claimant, remember the stop loss is at $55,000, but we start tracking claimants that are over half of that amount, so at the 27.5, of which we see there's one that is well over that, and we have another at least 2 that are going to be coming close in the next month or two if trends go there. But again, the total of 6 claimants compared from a historical standpoint is very good. It's very often that we have a dozen or more. So again, from a insurance standpoint, we're trending very well for this year. But this year is an outlier, so we cannot bank on this year to be the same for next year. But again, I do not see issues at this time from an insurance standpoint whatsoever. Are there any questions about the reports? If not, I'll move on to overtime. And again, not really needing to belabor the point. If we're looking at the main numbers, we look at sheriff, we look at jail, and we look at the actual year to date versus the revised budget. Jail is looking very good. Sheriff is a little bit over what it was. If you're talking about 55%, that's a little bit higher. We'll continue to look at that. But again, I do not see any items that are of major concern for the committee. That's it, unless there's questions by anyone from the committee. And again, we bring out these reports just so you can monitor along with us. It's not that they necessarily need to be for discussion, but I always want to make sure that the committee is aware as to what are we looking at on a monthly basis as well. So if not, I can move on to the health and dental. Oh, I'm sorry, Mr. Baker.
I was just looking over the overtime again. The overtime for county winter, see, I assume that's county winter maintenance, being half of what it was last year at this time. Is that right?
Let's see where I am. Yes.
Is that primarily for like plowing and such like that?
If it's overtime for winter maintenance, yes. And again, a lot of times when you're looking at overtime, when does the snow happen? If it happens on a Saturday or a Sunday, or if it happens at night, well then.
The only reason I asked that question is because we're discussing that we're at 90% of the budget for
Correct.
winter maintenance, but we're only half the budget or half of what we were last year for.
Yeah, and that's one of those things that, we don't go that much into detail of tracking it, but you're right. Part of it is we're at 90% because it was a above average winter in what I'll call 1920. We'll see what 2021 is, and that's where we'll see what happens. Again, we project that it'll be over. In the budget, what we try to do is take a 3-year average of winter maintenance, so the line or the allocation for winter maintenance will be projected to go up for winter maintenance.
All right.
Yeah. I'm sorry, 5-year. Thank you.
Yeah.
Yes, which I like better as well.
You got to remember, Doak, that labor is only a small portion.
Of that
of
that 90%?
of that 90%.
Okay, all
I
right.
mean, equipment is a lot more
Ah,
a
okay,
part of it than the labor is.
okay. So every hour the truck's out there, we get allocated, I mean, something gets allocated.
Yeah, I
for
mean, just say that that driver is $25 an hour. Okay, so if he's on time and a half, it's $37.50. Okay, but
And only that
the truck,
differential goes to overtime, right?
pardon?
Only
Yes,
that
correct,
differential cost.
correct.
Yeah, okay. So I can see
So,
it's a pretty
you know,
small.
and that,
yeah,
that truck cost maybe be $150 an hour.
Hour, yep,
And-
got
So,
it.
you know, that 90%, that over,
Truck
that,
doesn't get paid overtime.
no, it doesn't. It's straight time.
Okay, just wanted to be sure.
Although we could set that
No,
up.
I wasn't encouraging that.
I'm sure Todd would go for that one. Gary?
Will some of that money come back from town payments for plowing in the towns?
Yeah, that's the other
That's
thing, and
separate.
thank you, Gary, and that's part of it as well, is that from the overtime, all it's showing is what we're paying out. And so if we're doing plowing or overtime just in general, whether it's winter maintenance or any other type of work we're doing for the towns, you're not seeing the revenue side of it. You're only seeing the expenditure side of it. So if we have a bunch of projects that we're doing for the town or the state, and therefore we're going to get payment for that, you would not see that in this overtime report.
Okay, but what we do see on the overtime report is winter maintenance is county roads. So then we have local government construction, there's 8,000 and 18,000 of overtime. That's what gets billed to somebody else, towns, municipalities. So it's sort of separated on here. We don't see the revenue from any customers we have, but not all overtime. Not all overtime is billed. If you look on the line, you'll see who the customer is. In the case of county winter maintenance, those are county roads. Local roads, local governments, other department charges, those will all be charged to somebody else from the highway.
Okay. Just trying to figure it all out.
Okay, any other questions?
Regarding number 9, which is health and dental insurance plans and premiums, what we try to do, I try to schedule for every year in September for the Finance Committee to approve the percentage increase. I'm just going to say it as an increase. The percentage increase for the premiums for the health and dental plans. September 4th is the earliest that we would have ever done. Horton and our insurance consultant wouldn't be ready at this time. I had asked them if they could have everything ready for the committee for September 15th, since we would be meeting a little bit prior to the county board meeting. I like to have the finance committee approve those plans and those increases prior to the budget being done. It just helps from a budgetary standpoint. So as a preview for right now, and if you remember from last month, Horton had said, and they're still pretty confident in their numbers, is that the dental premium would have no increase, so that would be 0%. They're still looking right now at a 3.5% increase for the health insurance plan. In talking with them, I am looking at a couple different things. One, we could do some changes regarding prescription drugs and the formularies. The amount of savings to do that is going to be small. I can't give you an exact percentage. It will be pretty nominal. The other thing we're looking at is that Humana had, at the very last minute last year, had offered a voluntary vision plan that employees could therefore take advantage of if they so chose. We will probably try to do that this year because the timing does allow for that. That is of no cost to the county. It would be a voluntary program. But I guess the only other question that I put to the committee is, are there specific things that people may want to have to be looking at? I can talk about a couple for some of the new members. There seems to be, and understandable for newer members, there seems to usually be talk about a spousal carve-out. And we've looked at that year after year after year. And for our plan and in general, The feeling is that spousal carve-outs are not good for a plan, because more often than not, if you have a healthy spouse, we want them on our plan. If it's an unhealthy spouse, they're going to be on our plan, because more often than not, the county has a better plan than anyone else. And so therefore, all we're doing from a spousal carve-out standpoint is we're paying someone to have their healthy person not be on our plan, which actually hurts us in both ways. We're paying for it, and we're losing a healthy member. So in that respect, if there's some concern about spousal carve-out plan, I would recommend that we do not do that. We have in the past, and I don't know that we do it every year, but we have looked at different copays and different deductibles. I think since I've been here now for 5 years, the plan with deductibles and copays is very comparable to other counties, very competitive in that respect. So last year we did not really have any major changes. I would not recommend any major changes this year either. Yes, Mr. Baker.
Oh, the premium for, what do we call it, stop loss or something like that for the
Yep.
major?
Yep.
How does that, is that going to go up?
Absolutely, it'll go up. Again, historically, they're looking usually at a 15% increase. That is incorporated into the health plan itself. Part of the reason why we're continuing to see increases is because historically, this is the dirty, and I won't say dirty little secret, it's actually a good little secret, is that from a historical standpoint, actually, if you were to go over the last 5 years, we've probably received more money in stop-loss payments than what we paid in stop-loss premiums. So, insurance companies don't exist to lose money.
Right.
And so seeing that increase is not unexpected until they kind of gets to an equilibrium. But again, in conversations with Horton, that 15% as a historical for us is not unexpected.
So is that part of the premium, the premium that's paid covers that stop loss premium as well?
Yes.
So when you're reporting the 88% or something for medical as of today, that is including the premiums we've had to pay?
The stop loss premium is part of the entire premium, which includes administrative and the like, so yes.
Okay.
So again, just as a FYI, at the September 15th meeting, I will be asking the committee to approve the health and dental insurance plans as well as the suggested premium increase. Thank you, Mr. Chair.
Okay. Move on to number 9.
Regarding the CDBG closed funds, and I'll give a quick little history for newer members. The county revolving loan fund, or RLF, that was federal money that came from Federal Housing Urban and Development Program, or HUD. These were funds that the county was able to loan out to businesses and entrepreneurs. The feds had done an audit of those programs. They had found a number of deficiencies statewide. It wasn't specifically Kewaunee County, it was the entire program. The feds and the state of Wisconsin came to an agreement that what could happen is those funds that are in those programs, and for the county it's roughly about $1.5 million, that money would be returned to the state, and the county could then apply for those grant funds in a non-compete fashion, but they would still need to meet Community Development Block Grant, or CDBG, national objectives. When we started to look at that, we found it very difficult for the county to find projects, and part of the reason why is from a national objective standpoint, it's very difficult for the county to show blight or to show low to moderate income as a county itself. We don't meet those thresholds. So we had conversations and we put out requests to the cities and villages within the county for projects. And so we did receive some, I'll call it an application from both the cities of Algoma and Kewaunee. So for the roughly 1.4 plus million that we had, went through a series of reviewing those applications and making a determination. The previous finance committee did approve an allocation of $750,000 to the city of Kewaunee and $680,000 to the city of Algoma. Those funds could then be used as a match to try to use as a match for CDBG public facility grant application, which is a competitive grant program. So before the end of the year, we will be providing those allocations to the cities of Algoma and Kewaunee. We do know that the city of Kewaunee has been successful in its grant application. So that's going to be some very good news for the city. I can't give the exact amount because the state has asked for the announcement to be embargoed until they can do all they're needing to do. The city of Algoma is working with the state as well regarding their application. Either way, the reason we're doing this is if we did not do these projects with the cities, then that money would just be returned to the state, and then it would be available for anyone within the state to apply for those funds. So why not instead have some local projects and keep $1.5 million within the county? And so I think this is going to have a definite impact in those cities and for the better. But I think you're going to hear some good news in just a few weeks for both definitely for the city of Kewaunee and more than likely the city of Algoma.
Good.
Okay. Number 10.
Thank you. So for the routes to recovery money, you have in your packet kind of a list of various proposed projects or costs. Again, for a repeat, the county has roughly $338,000 allocated for routes to recovery projects. They must be government expenditures that were not budgeted and are COVID related. The reason this is in front of the committee is because this would be an influx of money, which therefore would change the 2020 budget by more than $20,000. So therefore, it must go in front of the Finance Committee for approval, as well as the County Board for approval. If it please the committee, I'll just kind of go through the list right now as to what are some of the items and what are the rationale behind them. And then I'm looking for, we have some recommendations, but I'd be looking for input from the Finance Committee as well. If you see the first 4 lines where it says priority 1 and it talks about, and the numbers are actually in an orange box, those are actual wages that have been expended by the county. We know that those costs will be reimbursed, and we will be submitting for that because the money has already been spent. Again, this is normal employee wages. It's just, so it's not like we hired more staff or gave them more hours. It's just we're able to ask for reimbursement from the hours that these folks are already working. Yes, Mr. Baker.
What were they actually doing? Were they doing their normal job, or were they doing things that were related to COVID?
They have to be COVID related. So think of like public health department, emergency management department, maintenance department. So in that respect, they, like I said, they're doing their normal job within the department, but it was now COVID related.
And it has to be above and beyond what was budgeted in the routine stuff. So that's what's included in there.
And there may be a little bit of overtime, but again, that's not going to be routes to recovery. So I think of the overtime in the public health department. There's actually another pot of money that the public health department can access to pay for that overtime and some of their additional costs as well. So then if we go to the big long list of items that we see here, there are a number of them that I'm kind of presenting to the board and looking for approval. So if we go with the very first one that talks about fairground entrance door with access software, surprisingly enough, and I never really paid that close attention, but at the fairgrounds with that, at the main entrance, which is a bank of glass doors, there's not a single ADA compliant door at that entrance. So from a COVID standpoint, yes, we can now make a door or two of those doors ADA compliant, because then people don't have to touch doors and pull bars, and therefore we can receive reimbursement for that project. The second one was drop boxes for the highway building in Luxembourg. I took those off. The amount is only about $1,300 each. While that may be helpful to allow people to make payments and not have to come into the buildings and they could do some of that afterwards, it's a small enough amount that we could look at some of these other projects that could more than cover that. The next item is laptops. We had a number of people, because of the Safer at Home order, that had to work at home. And so we had some folks that took their desktop computers home with them and had to do it that way. I think what we should try to do to become more flexible is we can buy laptops with docking stations, and therefore they could still, if they're at work here, they could plug in their mouse and their monitor, and their laptop would function just the same as a desktop. But if they needed to work from home, they can take the laptop off of their docking station and be able to work from home. And right now that says 10. Actually, I would like to bump that up closer to 15 or 20. As for cleaning supplies, we had talked with the maintenance, with Greg Gabriel, our maintenance department head, and 5,000 is probably going to be a little bit more difficult. He's seeing that we can probably do 2,500. Again, we can, what do I want to say? We can stockpile some cleaning supplies, and that will be acceptable to the state, but we cannot be overly aggressive in that stockpiling. So if we're able to get some extra cleaning supplies now, as opposed to having to budget extra for this year and for next, then that's what we're looking at. Remote worker software system. Again, as we have more and more people working from home, they become remote workers, yet currently we do not have any type of system that could help to monitor their performance or if they're getting work done. I thought it may be a good idea to try out some software and see if that would work, especially if we're looking in the future. You have a number of departments looking more and more of having their staff work from home as opposed into an office. That reduces the need for additional office space and heating of office space and the like. So if that's kind of where things need to go, then maybe we should be researching software that allows us to monitor and manage those remote workers. The ArcGIS license, that will allow, right now we have our land information director. He's been coming into the office, but he does work remotely. But we also have a member of the IT department that is going to start to be taking on some of those duties as well. So we will need another ARC license to allow both of them to work remotely. I'll go down, then you have the next 4 video conferencing. So that would allow the county to wire these rooms in such a way to allow for video conferencing. That would be this room, the large training room down in Human Services, the 4-H room out in Luxembourg, as well as the Fairgrounds Exhibit Hall. So that way, if county board meetings continue to be in the exhibit hall, that those are wired to allow for that. The two other ones that to me are much more in the gray area, which therefore I am not recommending per se, would be a radio upgrade that would allow better connectivity from the administrative building all the way over to Luxembourg, but we think we may have a workaround for that anyways. And from the command post trailer, that would replace our current incident command vehicle, but we don't know for sure that that would necessarily be approved. The replacement of that vehicle is on the capital improvement plan, but it is a few years out. And so we could do that, but it's not something that I am strongly recommending. The last ones that you see on here are video conferencing of other rooms throughout county buildings. We do believe, and where it says deputy wages, that we do believe that we can get a reimbursement of some of deputy wages time, maybe about 5% of their wages. And so we would do that. The other four are just kind of, well, if we somehow had all kinds of extra money to spend, we could do something similar to what you see at like school districts and the like, that you'd have someone come to a building entrance, press a button, there's a camera there, and someone could therefore let a person in remotely, which again would help for not only building security, but also from a COVID standpoint, we're restricting access. Then we have phones within the Emergency Operations Center, a portable electronic sign, and if we needed more Zoom licenses, which I don't believe that we do. As you can see, we have roughly close to $500,000 in estimated projects. That's a good thing, because then that means that we can spend every single dollar that will be allocated to us. But in that same respect, we can't spend it on all of them. So recommendation to the Finance Committee is, and the other reason why this is important is because the money must be spent prior to October 31st. So I would need approval from the Finance Committee that we can move forward with these things, so that way we can get these projects scheduled and invoiced and paid prior to October 31st. So if I'm doing a recommendation, I've already talked about the wages up at the top, and I would definitely do all of what are called priority 2, all of what is priority 3, and then if there is any extra money, then to do maybe another video conferencing in one of the other rooms, as well as see if we can do number 7, which is deputy wages. Are there any questions or concerns for that matter? Sorry.
Are these, do we have to pay for them and then get reimbursed?
Yes, Supervisor, and in case no one heard, yes, this is a reimbursement. So the county would have to make the payment first and then submit a request for reimbursement. Yes.
How much documentation is required to make sure that you're going to get reimbursed?
And I'll make sure that if I'm incorrect, that Paul corrects my mistake, is if we have the invoice and we have the narrative as to why it is COVID related, while this is federal money, it is not as onerous as what it usually is from a federal standpoint. The state has communicated pretty often that be realistic. We want the invoice, we want the narrative, but you are not having to give away your firstborn.
So in addition to that, yes, have all the information available. What we have to do is just send them a list, but the description is key. Make the connection of that purchase to COVID, and it is still subject to audit. So the 3 items that we say, well, DOA approval needed, the command post trailer, they didn't come out and say no, but they probably should have just said no. That one's not going to happen there. Maybe FEMA will pay for one of those. The radio upgrade was kind of iffy, and they confirmed that deputy wages, a percentage of time directly related to COVID, can be covered. So I did get some information from the Sheriff's Department. I haven't gone through that yet to put a number on it.
So some of these items, as I understand it, are guaranteed just about essentially to be recovered. Some of the items on here are needs that are gonna be purchased, acquired in the future, such as the command trailer. And then some of these are just simply a wish list.
Yes, and would you like me to go with ones that I think are iffy and others that are wish list, if you'd
Well,
like?
yeah, I guess what
Sure.
I would like to make a motion to approve, but I would like to know exactly what we're gonna pick out of this that's needed, and then what that dollar amount would be as a recommendation to the county board.
Certainly. So I'm going to do it by the priorities that are on the left. That'll be the easiest way, probably, Supervisor Vollenweider. So all that are priority one, we will do that because, again, we've already spent that money because of wages. I would do all of priority number 2. Then for priority number 3, I would do all of them except the radio upgrade. And if we do that, if you look to the right, you will see balance remaining $3,307. So then the last one that I would do would be priority number 7, which is deputy wages.
You wouldn't do any in number 5?
Correct. Because if we've done all of 1, 2, and 3, and number 7, we will have spent the entire amount of $337,864. Yes, Mr. Baker.
I'm troubled by the feeling that we, as a committee or as a county, we need to spend this money and come up with ways to spend it. Certainly, the first 4 items are legitimate charges that we didn't expect to have because of COVID. Can anybody explain why we have to spend this money? It's our money, it's our taxpayer money. Why do we feel the need to spend every last dime that we have permission to spend?
You bring up an excellent point, Supervisor Baker, and philosophically, I absolutely agree with you. From the reality part of it, I'm going to take philosophical out of it for right now, is that the county is being allocated $337,864. If we do not use that money, it goes back to the state, which then makes it available to everybody else. And similar to other parts is, well, if we don't spend our allocation, someone else will spend our allocation. Does that make it right? Philosophically? No, it doesn't. But in that same respect, from a financial reality standpoint for me as a county, is if the federal government is going to give me $337,000 and I can use it on wages and I can use it on cleaning supplies and an ADA door and some of these other things, and therefore I don't have to go to my county taxpayers to pay for these things, then I will try to use that grant money as to its fullest extent. Philosophically, I don't disagree with you, Supervisor Baker.
Well, then my question would be is how many of these things were already on our budget and we were going to allocate county money to go do?
If we're talking over the course of years, the laptops definitely would be one. As for the expenses, well, those are things we do anyways. So again, those are already spent.
Which ones are you talking about there?
Whether that's priority 1 or priority 7, those are wages that the county pays our workers for anyways. That's for, let's call it time worked. As for the video conferencing, that has always been something we've always kind of wanted to do. And more now with COVID and with doing things remotely, this is something that I think we would eventually be going to anyways. So again, the money allows us to invest in that type of infrastructure, which instead we'd have to do through a capital improvement item. Last but not the other one, the ArcGIS, we would have needed to do that. Cleaning supplies, we're doing some extras. Why? Because again, COVID related and the expense. So probably the only one that is really kind of out there would be the remote worker software system. But part of that is if we do, which I again think not much later, but later into the future, you're going to see in more and more workers working remotely, then you want to try to have a system that allows you to manage them.
Say, for example, you have a worker that has to quarantine, they can still work.
Or what happens, which could very well happen, is schools close again. And now you have a number of our employees that have school-age children, and therefore, I don't want to be the employer that makes you choose between your child and your job. Instead, if you can get your work done from home, then I'm all in favor of that. But then you as elected officials are going to be saying to me, well, Scott, how do you know this person is doing their work? Well, we can try to look at ways to provide that assurance. And so be looking that way. Yes, Mr. Poppy.
Can you explain why video conference at the highway training room is almost double the cost?
The highway. I cannot.
You know, it seems like it's, you know, that room gets used a lot.
Yeah, and to be honest, we can take a look at that as well, in that maybe that's something we do.
I'm just curious because it shows, you know, almost double the
Right.
cost.
I'm just going with what the bid was from the two firms, and we got two different firms to do it.
Okay, thank you.
So, yes, Mr. Baker.
So this money would have to be, the checks would have to be written to the vendors by this October date?
Yes,
So work would have to be done on all of these things in order to write those checks?
work doesn't have to be done. The bill has to be paid.
From an accounting standpoint, we don't pay before the work's done unless it's for materials they're purchasing, right?
A little uneasy about that, because if the work isn't done, you pay them, what's the incentive? So we're kind of in okay, how do we make that work? But the hard deadline is October 31st.
There must be a way we can leverage ourselves that, I'm sure you've got that.
I'm going to assume, and the big one that we're really looking at, let's be honest, would be the video conferencing, because that's the most of them. I really doubt whether it's Camera Corner or whether it's Heartland that we do business with on a regular basis is going to want to therefore screw up future business with the county by not finishing the work that had been promised to us. So therefore I feel I have a little bit more confidence, but as Mr. Kunish had said, there is a sense of discomfort that you're paying a bill and you may not have everything finished as of yet.
You would still have recourse, obviously, if you have a contract and somebody doesn't fulfill that contract. It's not as good as having the work finished first, but you do have recourse. And I mean, unfortunately, Supervisor Baker is finding out why government on, you know, some of these federal and state levels just doesn't work. I mean, they force people. They force, you know, the local government to spend money that really, let's face it, I mean, we can be thankful that this fourth or fifth or whatever wave of CARES Act isn't able to get passed currently, because they're spending money that number one, we don't have, and number two, doesn't need to be spent. But it is an issue where if we don't spend this money that's allocated to us, then somebody else, it's still going to get spent. It's going to get spent in worse ways.
And yes, exactly. I would say it this way. I don't like the game, but I still have to play. And so if I'm going to play, I'm going to try to take as most advantage as possible.
Problem is, on the county level, we can't fix those things other than to, you know, get better elected officials at the higher levels of government.
But we don't have to spend the money on some of these things that we didn't budget for before. I don't see where.
I understand that. I understand that part. Let's at least spend them on things that we would be spending them on normally, so that we are able to, you know, have some savings to our local taxpayers. That makes complete sense. Yeah, I get that.
I think that, I have no dispute with the first several items that we've already sunk that cost. This was, I thought, intended to help us with that, but not to help pay for things that we didn't have on our wish list to begin with. I don't know that this video conferencing was on anybody's budget so far.
And it wasn't. I won't disagree. And please don't think that I'm disagreeing with you, Supervisor Baker. It wasn't. This is how I'm going to spin it, and get guilty as charged, is that in that same respect, we weren't thinking that a COVID pandemic would therefore require us that more often than not, we're going to have a bigger push for social distancing and the like. So because that was an unforeseen event, which is now causing us to have to adjust for the future, then again, the spin would be the money being made available for us to allow us to video conference is justified because we're now, counties and local governments are able to respond to the pandemic in such a way that they can still conduct their business and not have to do face-to-face.
And it's not on the next couple of years for capital improvement, but the video equipment in this room has been here since the building's been around. It's not going to last forever. Video conferencing is being more and more available, used more. I've got one coming up next Friday. This system isn't easy to use. It works. We make it work. Equipment's not going to last forever. Take the opportunity and upgrade it because it's going to happen at some point.
So you're concerned, go ahead.
My
Sorry.
personal experience with video conferencing in the private sector is companies will invest in that. You have a separate room set up and you come by it 10 years later and you realize you've never seen that room used or it's very infrequently used. It's very cumbersome and you realize you've been doing the same video conferencing with Zoom meetings and that doesn't cost a penny. Everybody's got the facility, the ability to do that with their computer. Those are the kind of things that bother me as we may spend this money because we're in a rush to go spend it on things that are of no value to anybody.
And again, I can't disagree with what you're saying, Supervisor Baker. The only ones that I'll also go from a video conferencing standpoint, but again, that is the comfort levels of the different committees, is that if you look at the boardroom, well, the boardroom is used and we can therefore now transmit county board meetings or county finance meetings or meetings from this room. We can do then the same from the human services room. We can do the same from the 4-H conference room, and we can do the same from other rooms within county buildings that those meetings are then held. But while I continue to repeat myself, and I'm hope I'm not giving the impression that I think this is absolutely vital. I'm not. I'm just, again, from the game standpoint, if I'm able to be provided funds that are allowing me to make investments, then I'm going to do it, as long as I have approval from the committee.
Are we currently renting the equipment that we're using right now, like say at Luxembourg Fairgrounds?
Yes, for the county boardroom, yes. We rent that and have people come in to do some of that, yes.
So that expense would go away then probably, hopefully.
If it was done correctly, yes, sir.
Thank you.
And what are we paying on those every time we have to have a county board meeting at the fairgrounds?
I forget the dollar amount. I know it's in the hundreds of dollars.
I think it's 400 per meeting.
There we go, 400 per meeting.
400? I thought 6, but either way, so, that is definitely an expense to the county every time we do that. If we were able to not have that, that would
Is
help.
that one of them we're buying?
Yes, that would be under the Fairgrounds Exhibit Hall.
Did you also add that expenditure on this request list?
Yes, it's in one of the orange boxes.
My only comment is if this board wanted to, they could make a statement like, we're gonna spend 80% of this money and we're returning 20% of it, and make some statement that the state should follow Kewaunee County's great lead. That's certainly,
Guarantee you they won't.
well, I'm just saying, if that's the board's
I
prerogative.
don't picture our governor following that lead.
No, not a chance.
Sitting on 610 million that he hasn't dispersed yet.
Right.
I think a snowball has a better chance.
Again, Supervisor Baker, I do not disagree at all, and I would think most folks in this room would not disagree at all with the philosophical point that you make. Again, I don't want to speak for the other supervisors, but for me personally, I don't disagree with the philosophical point that you're making.
Okay, Virginia?
I'd like to get on with and make the motion to spend the money all, and I like the plan because I see more and more businesses working from home, and even when this virus is done, I think we're gonna have the issue. Human Services was talking months ago already about being out of space. Well, if we can get some of these people working on their home, we won't be out of space. So I think we should just make the motion to go ahead and spend this as planned on this sheet.
Okay, we have a
I'll
motion.
second the motion, just if Virginia would clarify that the motion would include all of items 1, all of items 2, all of items 3 except for the radio upgrade. Item 7 for a total not to exceed the 337,900, if she would make that amendment.
Absolutely, I would agree with that, yes.
Thank you.
Okay,
Being recorded, so I'm going to have to go back to that.
we have a motion by Virginia, a second by Jeff. Is there any more discussion?
And that's recommending the county board, correct?
Yes.
Thank you.
Okay, be no other discussion. All those in favor signify by saying aye.
All right.
Opposed?
Aye.
Okay,
Just a comment.
yes.
Once this is all happens, we have received the money and spent it, and it's federal money, then your issue that we talked about with the auditors is going to surface again about more requirements for reporting.
We'll see it next year.
Yeah.
Something will come up with
Something will
this
come
until,
up. Absolutely. Okay, moving on. Vendor payment, you all got a copy of it? Is there any questions on it? Doke?
So where did the disbursement, we paid a lot of money out this month to local towns and municipalities, right?
Yes,
So did our fund balance go down by $8 million or something like that, whatever went?
no, that's money we collected this year for tax payments and paid the portion for the municipalities.
So where was that sitting that we didn't see it in that statement of all our finances?
We collected it this year. And so that was the end of 19. So we collected it from January through July, kept our part, gave the municipalities their part. So it was never a part of 2019's financials.
What I'm saying is when we looked at like our investments and our balances last month
Yeah.
in this meeting,
Yes.
we were at 12, 14 million something.
Oh, yeah.
So has that balance gone down by $8 million now?
The cash balance, yes.
Okay.
This statement has revenue and expenses, not cash, assets, and everything else. Gotcha.
Any other questions? Okay. Review and approve the supplemental payroll.
I make a motion to approve the supplemental payroll as presented.
Second?
All right, moved by Tom, seconded by Doak. Any questions? All those in favor signify by saying aye.
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 Opposed? Motion carried. Any other matters? Anything else?
Yeah, I have one other thing, Mr. Chair. I had given to you, I believe it was 2 months ago, a heads up regarding the rental process or the bid process for the county-owned agricultural land. We will probably be starting that process in October. The leases end at the end of the calendar year. We have 3 main parcels. One is land that's adjacent to the county landfill. The other is land at Sikorsky Pit, and the other land is at Walter Pit. I know that there have been some requests from folks if that, especially from current leaseholders, if we could just renew the leases. What we have, it's a 5-year lease. What we have done historically is that we do a closed bid system. Here's the amount of acreage. How much are you willing to put forth as an acre? That is sent then to the county in a closed envelope, which is then opened, and we then award the lease to whoever has the highest bid. As a county, I don't know that we're necessarily required to do a closed bid process. I think it has worked well in the respect that it allows everyone an equal opportunity to lease the land, but the committee can make the determination, if it were to so choose, that you could just extend the lease to the current leaseholders. Am I wrong with with what I'm saying, Mr. Wisnicki?
That is correct. Is the parcel over here also coming up? I think,
I think don't we still have one more year with Mr. Wisnicki?
oh, either one more or it's up.
I think it's one more. But, so I guess I am just wanting some direction from the committee, is if you would just want to extend the lease to current leaseholders for another cycle, or if you would like to continue with the closed bid process. I had just said to the leaseholders that I was willing to put that in front of the committee. The committee gets to make that determination.
So Scott, I had seen somewhere, I don't recall where, the current average price of land, lease cost that were out there between Door and Kewaunee County, and not knowing where these leases are currently at. Are they competitive to market rate? And if they are, I don't know that we need to explore other people to bid on it, but maybe if they're not, maybe we do need to entertain some bids.
I would have to check. I can tell you at least what the current lease rates are for the 3 different properties. For the property by the landfill, that is $252.06. For the land at Sikorsky Pit, that is $150. And I believe for Walter Pit, it is $100.
I think actually it was UW Extension. Did they maybe put out that?
They did, and I know, and again, that's a very broad, and I understand, that's still helpful. The one part, and not knowing enough about what is considered quality land and what is not, I know that we have different rates. Perfect example is, I'm going to assume, though farmers here may know better than I, that land that is adjacent to a pit is more than likely not going to be as productive as what we may have at the landfill, hence why the higher amount. But I would be more than willing to go and check that out, so that way at the October meeting, we could have that discussion.
Thank you.
What do we risk by going out for bid? I would assume that if you're offering to renew a lease, those people at least would still be interested in bidding. They might choose to bid lower, but it's been 5 years, so the rent could have gone up, or the average rent could have gone up.
Absolutely, Supervisor Baker, in the respect that, could you, from a closed bid standpoint, could the price go up? Could the price go down? It could. The one advantage, and I'm not saying it's a big advantage at all, is you already have the current leaseholder from a contractual standpoint and everything else. Administratively, it's as simple as to renewing a lease contract. Does that justify not doing a closed bid system? To me, that's up to the committee. I have no preference. I mean, I do believe from a public standpoint, allowing everyone to have an opportunity has some inherent advantages.
Right, there's an appearance factor here
Yep.
that I think that, being responsible, we ought to put it back out for bid.
And I'm again, I had told the leaseholders that I was willing to put that in front of the committee, but that I wasn't making any recommendation whatsoever.
Is there any possibility, if we put it out for bids, using the UW Extension survey, putting some type of a minimum bid in the notice?
Yes, and we do that currently with the 2 larger ones, with the Sikorsky Pit and with the landfill ones. The minimum bid had to be $125. But yes, absolutely, as part of the process, we can put any minimum dollar amount if we so choose.
The landfill bid, what you said was what, 2 something?
252.06.
Is a very good bid, comparing those things we got from Extension. So that's a very good bid.
So you're going to have this on the agenda for the October meeting?
I would like to, if that would be okay with the committee, so that way, if we don't have agreement by October, we can definitely have agreement by early November, which allows then things to be done by December. The one part that I know some holders have some issues with is they like to know earlier rather than later because that determines on what they're going to plant. Especially from if they just renew the lease. Because what the current lease says is that you have to put down, I believe it's alfalfa, but if I know I'm going to get the bid, we're just going to renew the lease, well then that allows me some flexibility in my planting because I now know what I want to plant there and I don't necessarily have to plant alfalfa. So I guess that would be an advantage, not necessarily to the county, but it would be an advantage for the leaseholders from a planning standpoint.
I'm not sure I understood what Tom asked, but are we going to have you're going to bring it to this committee again to ask the same question and ask for a motion then next meeting?
Yes.
Okay.
Yes, and part of the reason why is because as the finance committee, this is the purview of the committee to either set the rate or to allow the land to be rented or the like, as well as then when we receive the bids, it's the committee's authority to approve those bids.
So if we were to determine that we wanted to actually put this back out for bids, then the information that we would be waiting for next month, you would be gathering would be a minimum bid? Or could the minimum bid be what the current rate is?
It could be whatever the committee decides it to be. So if we do, as you had asked, to trying to get some land rental prices as context as to what could be a minimum bid, then that could be set. I'm going to back up. I apologize.
Let me interrupt you for a second.
Sure.
So if we've already got this much money that we would consider extending a lease agreement for another 5 years, and obviously that would mean we're content with that rate.
Mm-hmm.
So that to me would be the base rate for the bidding process.
You could do it that way.
I mean, if that's the amount that we want to get per acre and we're thinking that we should put it out for bids, why would we have it any less than we're getting now for
I'm
the
thinking
baseline?
maybe even a little more than we're
Maybe
getting.
even more,
Maybe a few percent more just to cover inflation. I agree with you.
That would be up to the committee. The only part that I'd throw out there for consideration is it may be that there are additional costs or expenses that the leaseholder, the farm, would be taking in, and therefore they would not necessarily, and depending on what other prices and factors are in there, let's say that 252 now is too high for them to get them what they need, they may, and I'm making up the number, they may say now, no, the highest I can go is 240. And let's say if we were to do closed,
either, right?
well, they probably wouldn't.
Right.
Or they would, but I'd want to negotiate on the price. Like I said, I am not advocating one way or the other.
I don't know where the market's at now, and UW
Neither do I.
extension, like you said, was kind of a guideline that certainly, there's specific lands are all unique.
Mhm.
So those rates change. I don't know if those rates that we're currently getting are competitive. I don't know if I don't believe the farmers are in any less need of land for many reasons. So I
Correct.
can't imagine the values have gone down.
Yeah, the price of land is not going down.
Nothing's
so-
going down.
Yeah.
Did, Mr. Feld, did you indicate they're meeting on the 15th?
Yes.
Perhaps they could, I mean, you have one question. Do we put out for bids or do we negotiate with the current owners? And I guess the second question would be, do you want some minimum rate? So maybe you could set that on the 15th, and then between the 15th and the October meeting, we can actually get some bids in?
If that would, well, maybe not the closed bids, but because we like to get, usually the closed bid process is we send it to all adjacent landowners, and historically those that have been interested, we give them 30 days to put together their bids and then send them into the county. But if the talk is about whether we do a bid process or whether we do lease renewal, we could have that ready by September 15th. My only concern is if to the committee is an hour sufficient time to do the health insurance plans approval with premiums, as well as preview of the county budget. But can we fit it all in? We can, depending on how the committee allocates their time.
Well, let me ask you this then. What if we were to have a motion at this time to go forward with the bidding process, and all we would have to do is agree to the amount, or maybe we could agree to the amount now?
It's
The
not
the
part
only
of the
issue,
agenda.
Supervisor Vollenweider, is that we can't do a motion at this meeting because it's not on the agenda.
There you go.
On the agenda. Thank you.
If you weren't gonna get him, I was. He beat us both
I
to
like
it.
the efficiency. What are
I
you talking
know.
about? I like the efficiency.
I wasn't sure
Government
if you were
moves
still
slow.
awake or not, John.
Yeah, John, yeah. Well, then I guess we'll see it on the 15th.
So the committee would like it on the 15th then? Alrighty, thank you.
Thank you.
And the 15th, we have a hard stop, right?
Yeah.
We only have an hour?
Unless you want to start earlier, because the county board meeting would start at 6. So yes, it would be a hard stop at 6.
Your end time can't go back, but you could move your start time up.
But not
Two
retroactively.
in the afternoon.
Do I think we could
Thanks,
do all
Dan.
3 of those in an hour? Yes, I do, as long as you guys don't let me talk.
You got a point there.
Well, the board would have a quorum, you could continue, so the board would continue with 15. Just saying.
Actually, one of those items was a presentation of the budget. If they're going to hear it immediately after at the county board meeting, that could be condensed a little bit to make it fit into an hour.
We'll task you for an hour, Scott. We'll give you an hour.
Yeah.
Thank you.
Every day.
Well, you're good your time management skills are.
I still think, you can move up your start time. I don't have any problems with that.
I'll just try to be brief, which is, difficult for me, so.
We'll make it fit.
Yes, we'll make it fit.
I have nothing else, Mr. Chair.
I just
Okay.
have one question for Scott. Did you get the recent notice from Bay Lakes about the amended levy? Because of the original one, apparently they sent out, did not discount the TIF districts. So they sent out an amended levy.
When did they send that out?
I got them
You might
a
have got it.
couple
Paul?
days ago. And yes, the amount they sent out was what I originally calculated, so
The 10,000 something?
yes, 10,700 something.
Okay.
Just wanted to make sure that you got it.
Any other business? Okay. No other business. Next meeting is the September 15th meeting, 5 o'clock. Be there, be square. And I would need a motion for adjournment.
I'll move.
And we already set, didn't we set October 2nd also?
I think what we've said, if I'm not incorrect, is we have set all finance committee meetings for September, October, and November. And when I say November up to the approval of the county budget. If the finance committee then believes that we need to have another finance committee after the county budget, then we would set it at that time.
When did you set your November meeting for?
2nd.
It would be,
November 2nd.
it would just be November 2nd, and then if there's a need for prior to the 10th, I meant 6th, sorry.
Oh, I'm
It's
sorry.
October 2nd.
I'm talking about October. I'm
Oh,
sorry.
yeah.
October 2nd.
November 6th?
Yes.
At 8 a.m.?
Yep.
I'm just trying to make sure. I don't want to miss one of these.
Right.
They're exciting, aren't they?
Boy, that just ruined my month if I miss it.
I'm glad that we have groupies, so, yeah.
Really?
And you said December?
No,
No,
no, all of them
November.
have been set for the month of September, for the month of October, and for the month of November.
November was the 10th, correct?
6th.
Yeah.
The 6th and the 10th. The 6th would be Finance Committee, and if we need to have something prior to the county board, then it would be prior to the county board, the 10th.
But you haven't set that.
I do not believe that we have, because I would think that if we don't have it done prior to, by the 6th, then I haven't been doing my job correctly.
Okay. Just in the event, Tom, prepare yourself for the 6th. Because I'm scheduled right now for Branson, and I'm not coming back for this meeting.
Could you run it via Zoom?
Isn't that like the senior version of Las Vegas?
Kinda, yeah. Yeah, the showgirls aren't as good looking. Okay.
There
Now,
was a motion to
Jeff,
adjourn.
you had a motion to adjourn. Did somebody second it? And this is seconded by Tom. All those in favor signify by saying aye.
I,
All right, it's 10 o'clock.
I already got a hold of Tracy, she's gonna send me.
thank you, Scott.
I'll take care of it.
There you have it.